Hi, this is Dustin. Welcome to Connect, California MBA's monthly podcast featuring one-on-one interviews with movers and shakers and leaders in the industry today. Today, I'm excited. We've got Bill Lowman here. It's a local for me here in the Sacramento area. Bill Lowman with American Pacific Mortgage. And I'm really excited to sit down with him and talk to him about what's going on in the industry, his thoughts on the future of the industry, and how he got to where he is here at American Pacific. So we'll jump into that here in just a second. But before we get started, I want to thank our sponsors at the Real Estate Services Trust. So if your company going into 2020, if you're worried about retention or recruitment of employees, making sure that your volume stays high in the coming year, I know that we'll talk about this here in a minute with Bill, but even though volumes were high this year, the MBA is predicting lower volumes next year. So everyone's got to make sure that you've got the best team you can possibly have on your side in 2020. And to make sure you do that, one of the ways that you can accomplish that is by having great employee medical benefits. And if you're a small company, say 20 to 200, you may have trouble finding affordable benefits for your employees. The Real Estate Services Trust can make sort of bridge the gap there between small company benefits availability and big company pricing. So if you're a member of the California MBA and you are in that sort of small to mid-size range, click the link below or contact Marsh McLennan Agency and find out, get a quote, see if it makes sense for you. So, all right, let's jump into this. Bill, again, thanks for joining us here today on Connect.
You're welcome.
The way we usually start these, I always like to find out what, what brought you to where you are today.
Yeah.
We often kind of jump right into let's talk about the industry,
Sure.
Let's talk about numbers, but what's your story, Bill? How did you find yourself here at American Pacific?
Well, wow. So that's a long story, and I'll probably date myself here a little bit, but I started in collections shortly after graduating from college back in Buffalo, New York, and went on to become a loan officer and then changed jobs and became a branch manager. And then I guess starting in around 1993, I got into regional management and worked for a company called the Money Store, which was headquartered here in Sacramento. And I migrated west with my family and landed in Sacramento in 1995. And then I started with American Pacific Mortgage about 7 years later in 2002.
Huh. All right. That's great. And never didn't think about going back east again, huh?
No, in many ways, Buffalo's home, but I love California, and it's been a great place to live and to raise my kids.
All right. So what would you say, Bill, and let's jump in the challenges that face mortgage bankers today. I think we hear that a lot, but I'm curious from your perspective, what's the biggest challenge you see going into 2020? Boy,
I think there's a couple of them, Dustin. I think there's a little bit of regulatory uncertainty. And when I say that, I'm talking specifically about GSE reform. There's been a lot of conversations about that. The FHFA director, Calabria, has been pretty aggressive in some of his public statements about reducing the government footprint in lending. I had an opportunity to meet with him last week in Austin at the Mortgage Bankers Association conference. Feel a little bit better about it after speaking with him. But with the push to get Fannie and Freddie out of conservatorship and reducing the government footprint in lending, that would have a significant impact. If not done and staged correctly on the entire industry. So I think that's, one area, and I think maybe the biggest area right now that, lenders really should be paying attention to.
Do you think that, we didn't go over this beforehand, but I'm curious your thoughts. Do you see GSE reform happening, especially in the next year where we've got an election year coming up? Do you see that as a 50-50, or are we still quite a ways away from getting something done?
I don't think it'll happen in the next year. I think that Commissioner Calabria would like Congress to act. Being an election year, I don't think Congress is going to touch this. I think he's going to make bold public statements to try to urge the industry into action, but I see this as a post-election occurrence.
Sure. Well, and certainly things could change. We have a President Trump in 2021, or a President, Warren or Sanders, or who knows.
Yep, that matters.
So speaking of the MBA convention that you just got back from,
Yep.
The MBA just reported, they always report all their stats at the convention for the year. And they reported what I think everyone kind of assumed was happening this year, that numbers were far outpaced the predictions from last year. But again, I think they're being a little cautious going into 2021, predicting, definitely a drop in originations. What's your take?
Well, my first take is I never get this right. When I try to predict,
You're in good company.
when I try to predict, what the industry is going to do or which direction interest rates are going, I consistently get it wrong. I will say that I do line up behind the MBA projection. I think, 2019 is going to be probably a $2.1 trillion year for the industry. And I think, it'll probably end up around 1.9, I think, in 2020. I still think we're going to have, a favorable interest rate environment going into next year. But at some point, all the people that refinanced in 2019 are not going to be refinancing in 2020. And I think we'll see volume back up a little bit. I still think it'll be a pretty good year, though.
Do you think the focus will be, just as much or even more on the purchase side of the business and less, even more on refinance?
Yeah, I definitely think that. I think that, lenders really do need to focus on purchase business. The refinance business, it can go away. I mean, we're one tweet away from having, some type of economic event which could have interest rates go up or down. I mean, I have a daily routine. I get up and I check our company's hedge position on our locked pipeline every morning, and I check my Twitter feed to see if that one tweet has somehow moved the markets.
See if the button's been pushed,
Yep.
As it were. So then, in that sense, how can mortgage bankers prepare going into 2020?
That's a great question. I think that in many ways, I think our industry has short memories, and that it wasn't that long ago. Less than a year ago, Q1 of 2019 was a tough quarter for the mortgage industry. More than half of mortgage companies in America were losing money. Really, essentially the same for the fourth quarter of 2018. And I think, whatever you needed to do then, you need to be prepared to do now, because when that does happen, you don't want to be caught off guard by thinking this is going to be great and this, rising tide is going to go on forever. And I think, that's the challenge, I think, for mortgage bankers. Be prepared, be able to withstand, shocking your volume and what can your organization withstand, a 20 or 25%, reduction in volume.
Well, and I love the short memories. I mean, anytime I can, in just my own conversations, I always like to bring in baseball analogies. It almost sounds like you've got to set up your company as essentially a closer in baseball.
Yeah.
Where, if you go out one night and give up 5 runs, you got to shake it off and go out the next night and pretend it never happened. And vice versa. If you go out and strike everyone out and go the next night, you have to, pretend it never happened.
That's right.
It's fresh every day. Interesting. All right. Well, then, sort of flipping that on its head, we hear a lot about challenges. Obviously, I just asked a question about it. But I think that we often don't hear enough about opportunities. Yeah. What's your sense on, what's the biggest opportunity out there for lenders?
Yeah, I think, I view challenges as, opportunities that are masked, right? I mean, in every challenge, there is opportunities. And I think, right now, obviously the opportunity is around capturing as much business as you possibly can. The rising tide has lifted a lot of boats. So, I mean, that's the obvious opportunity that's going on right now. As the industry transitions, though, into an environment that, has less refinance business going on, I think there's going to be a lot of industry consolidation. We started to see it at the end of 2018 and the beginning of 2019. And when that consolidation occurs, it becomes a bit of a game where there's winners and losers. And you want to be able to position your company by being able to quickly adapt and make the changes to reduce volume. And then you will be able to really scoop up and be able to recruit loan officers and take advantage of the opportunities that exist from companies that aren't prepared for that. And, frankly, I like down markets. I think I have a saying around American Pacific Mortgage that when it's too tough for them, it's just right for us. So I wouldn't mind seeing a little bit of pain going on coming in 2020.
Face those challenges head on.
Yeah.
All right. So here's a sort of a switching gears a bit.
Sure.
Your company has obviously, and you've been here you've been CEO of American Pacific for I think 15-ish years now. So you've got to see different generations of employees throughout the company, and
Yeah.
you've got, I'm sure, all generations, and I'm sure even some Gen Z folks in here
Yeah.
now. What's your take on, from your perspective in the CEO's desk, strengths and weaknesses from baby boomers to the Gen Xers and millennials and now Gen Z?
Yeah, I think, here's what I'll say to this. I think millennials have a bad reputation that is not deserved. I will tell you that American Pacific Mortgage, we have so many great employees that are millennials, that are future leaders of this company. And I think sometimes you hear that millennials are this or that or lazy. I say, that's bull. And I've got an office full of people here that would prove that wrong. So I think the industry needs to get younger. I think that, when I look around the industry, when I look around our board of directors, when I look around at other companies, the industry needs to better and more reflect the general population out there. And I don't think the mortgage industry is very diverse from an age perspective, from a gender perspective, from a race perspective. And I think, as we bring new people into the business, I think the industry needs to be more aware of that.
All right. That makes sense. Yeah, absolutely. Well, and I think that, you do make a good point about millennials. We've had, just in our Future Leaders program, we've had, successive generations of future leaders now go through our program that are all millennials.
You bet.
And, they are all turning out to either be, some of them even on our board of directors
Yep.
now, and certainly leaders in their company. So I couldn't agree with you more. So next question, about technology.
Mm-hmm.
What's your take? We just had our first Mortgage Innovators Conference
Yeah.
this last year and got to see a lot of the new tech in the industry and sort of see the direction of where things are going in that space. What's your sense on next big breakthrough or maybe the next space where the next breakthrough is going to happen? I
got to tell you that, first of all, congratulations on a great conference. I attended that. We had a number of our employees attend that. First year we've had that conference, and I thought it was wildly successful. So congratulations for that. I think I have a little bit of a different take on the technology breakthrough. I feel like, at least at my company, we have invested significantly in technology, whether it's our mobile application, our CRM. We've had a lot of production tools. We call it our tech stack. I think 2020 needs to be the year of adoption. I don't think the industry has focused enough on adopting technology. I think there's often this being fascinated with the next bright and shiny object. And I think we, as an industry, need to adopt technology better. I mean, you've heard the studies. I think, the average age of a loan officer in our industry is over 50 years old. And I think, I've seen firsthand there is some resistance to adopting some of the technology tools that we've provided our folks with. So at American Pacific Mortgage, 2020 is going to be the year about adoption and better adopting the technology that we have.
That's really, I would not have expected it, but that's an interesting point you make that, because you're right. Even at the Innovators Conference, there's a lot of, excitement about the next big thing, but there's not a lot of excitement around. It's just not, it's not a sexy thing to talk about,
Yep.
but, we should just actually adopt the things
Right.
we've got. We've got great tools right
Yep.
now, and, not enough companies are adopting them. So
That's right.
that's interesting. So next question for you, sort of along the same lines, and we mentioned this a little earlier, that you've been now CEO of American Pacific for 15-ish years,
Mm-hmm.
and you've got a lot of folks in your executive team that are sort of in that same, that have been here about the same amount of time,
Yeah.
or longer even.
Yep.
And I think that's unusual in the industry. Just from my, my perch looking at companies, I think that, it's definitely, a feather in your hat.
Yeah, thank you.
My question to you is, how do you guys what's the secret to building the right, whether it's, just a retention focus or whether it's building the right culture here? What's your take on how that happens?
Yeah, well, that's a great question. And it's really something that you need to work at every day. And it's not just at the leadership level, but it's throughout, the entire organization and all 2,100 employees that we have. First of all, I think it's really important to hear from your employees and to get feedback from your employees. And we survey them a couple of times a year. And so we track our employee engagement and our employee satisfaction and have every year for as long as I've been here. So we got our finger on the pulse, and you can never, get your finger off of that pulse because it can get away from you. And if you're surveying your employees, and then as importantly, listening to them and taking action and communicating to them the things that you've done to change in your organization as a result of the feedback they've given you, it really kind of creates a groundswell of satisfied employees, and it becomes part of your culture. And the other part is living up to the values of our company. We have 3 core values at American Pacific Mortgage: respect, transparency, and scrappy. Respect, I think that speaks for itself, but you treat others with respect, you treat the industry with respect. That's important. Transparency. You know what? We let our employees know what's going on, whether it's good, bad, or indifferent. We're communicating regularly through huddles and videos and other forms of communication to let them know what's going on at American Pacific Mortgage, to let them know what's going on in the industry. And scrappy. What does that mean? That means we're smart with our resources and we fight for what's right. And that's, I think, our employees' favorite value.
Smiling just thinking about it.
Yeah, and you know what? And you live them and breathe them every day. They're not optional.
That's great. So my next question to you is similar vein here, and we sort of touched on it with the talk about millennials. But what's your take on? Because I know you guys are really invested in this, and I think it's a great thing. The professional development of the younger folks at your company, which because I honestly, there's some companies I think that do this great, and are really focused on it and make a point of it, and then there's some companies that just don't seem to do it. So, what's your thoughts on how important that is for the future of the company, and the future of the culture of the company? Yeah,
it's first of all, it's critically important. And we do many things. I'll talk about a couple of them. One. We participate in the California MBA Future Leaders process. But it's more than that. Rather than just saying, here's 2 employees, go off to future leaders, our employees get nominated and go through a process. So we have, I think last year we had about a dozen employees nominated that went through almost a Shark Tank-like process where they got in front of our leadership group and we asked them some tough questions. And they, about their background, about why they wanted to be a part of the Future Leaders program. And 2 people ultimately emerged as winners, and then we send them off. So just the fact that you emerged.
You're already a winner.
You're already a winner. And as a leader in the organization, I got to learn about 12 people, some of which I didn't know anything about. So it's really a great process to go through. And even some of the folks that have put it out there and didn't get nominated to go to the program, maybe got promotions or other job opportunities as a result of, being and getting some face time with leadership in our company. So, and I think we've probably the last 6 or 7 years, we've sent 2 people to the California MBA. And so that's one thing we do. The other thing that we do that I think is unique in the industry, we have a program called Launchpad. And Launchpad, it's run by Haley Daly at our company, and it is for it's trains for loan officers. But these are for individuals that have never been a loan officer before, but maybe they have sales experience or sales aptitude, or maybe they worked in the mortgage business, but maybe in post-closing or some non-sales position. And we run them through a comprehensive 6-month training program where they essentially learn how to be a loan officer from soup to nuts. And then they graduate into a branch, and that's how we kind of change the direction and the dynamics of that aging loan officer base that we talked about earlier, where there's the average age is over 50 years old. So we have had over 60 Launchpad graduates in the last 18 months, and those are the Future Presidents Club winners at American Pacific Mortgage, and I think that's been really successful for us.
Well, and as a follow-up to that, I think one of the things that no one's going to say it to me as they think about whether or not they want to apply for our Future Leaders program, but I think I always get the sense that they're not necessarily convinced there's going to be a return. But I know that you and some of the other companies that consistently support the program, I think you guys absolutely get a return on it. And so just in that vein, what return do you get? What tangible return would you tell a fellow CEO that you get?
So, the some of the returns that we get, I would say that probably at least half or more of the graduates have been promoted in the next 12 to 24 months after going through there. They came back, more educated on the mortgage industry. They came back really motivated and wanting to grow. And that just gave us an opportunity to promote from within. And going back to, what we were talking before about culture and employee satisfaction, when you're able to fulfill or fill positions from within, that's a huge return to the company because of how engaged employees become. So I highly recommend the program. Any other mortgage company leader that wants to talk to me about that, please pick up the phone and call me.
Absolutely. So my next question, and this is maybe transitioning a bit from your role at American Pacific to your role on our board of directors. Bill is our residential president on our executive board and has been on the board for many years now. And so my question to you, Bill, what would you say to another fellow CEO about the importance of getting involved in the California, being a member, and what we do for the industry? I think there's a lot of time there's a lot of companies that just don't have any clue what we do. And so from your perspective, I mean, I know what we do because I'm there every day.
Yeah.
What do you think?
I tell you, I can't pick just one thing. I need to pick a couple. So the first thing I will say is the networking opportunity that you get as being a part of the California MBA. I mean, I've become great friends with other board members and am able to network with other mortgage company leaders on a regular basis. The conferences that the association does are great. The Western Secondary Conference is one of the longest running, best known conferences in the industry. The Innovators Conference that we've talked about, there's a lot of conferences where the association brings people together and you have the opportunity to network. And I think that's so important to be successful in the industry. And I think it might be a little bit of a lost art, networking. I think sometimes people are uncomfortable with it, but with the opportunities that the association gives, it's I think, one of the biggest benefits.
Goes well beyond LinkedIn.
It sure does. Yeah. It sure does. And the other thing that I would say that is really important is advocacy. That we have, the staff at the California MBA and the board of directors, but primarily you guys and the staff there, keeping your finger on the pulse, knowing what's going on legislatively in the state or even nationally, and advocating for the industry. And giving us an opportunity to participate and stand there with you and stand together as a state. I think that's critically important. There's always new legislation going on. We have a legal team that supports us, and many of us, including American Pacific Mortgage, we don't hire lobbyists. We don't have the budget to hire lobbyists, but we know that the California MBA is there to advocate for us. From a legislative and regulatory perspective.
Well, and I mean, you lend in I'm assuming all 50 states at this point, and so many companies do. The bills and the laws that pass in California often find their way into these other states, whether or not you want to or not. So whether or not your branches in Wisconsin or Kansas have any clue what's going on, they're affected by what's happening in California.
Yep.
Or at least they will eventually.
Yeah, it starts in California and it moves, to other states is what I've learned.
East.
Yep,
absolutely. So, all right. So, closing us out here, Bill, I've got a question that I always love to ask, because you never know what the answer is going to be. So, tell us something that mortgage bankers should know that they don't know. Humbly, I don't know that. I don't want to presume that I know things that other mortgage leaders don't know. But here's what I will say. I think, as a whole, the industry needs to pay more attention to cybersecurity. Mm-hmm. I think it is such a threat to all industry, all companies, all business, including the mortgage business. I've got a few friends in the industry that have been held hostage, with ransomware, and it's cost them a lot of money. And it's the bad guys. It's hard to keep up with the bad guys and what they do and the rules they play by change every day.
And I think it is such a threat. I just had a meeting today where I'm going over my budget for 2020, and I'm stepping up the spend on cybersecurity because it's that important. So I would encourage all mortgage companies, all leaders out there to really know and understand, the defenses that you have in your systems. It can cause financial harm, it can cause reputational harm, and really that don't shortchange that investment. I think it's that important. And I think, we all need to be more aware of that as mortgage leaders.
All right. Well, Bill, hey, thanks again for joining us here today on Connect. And,
my pleasure.
We'll catch you next time on Connect, where we interview one-on-one with today's mortgage leaders and tomorrow's mortgage leaders.